All right, it is time for the December 2023 real estate market update for the greater Sacramento region, and this is the last video of the year. That's it. No more market updates. We will be back in January. So I am not going to focus too much on our local housing market because there's nothing that sensational happening right now. I do want to talk about the national housing market a little bit. The median sold price is up a couple percent since this time last year. So year over year, that is increasing, which is good. I know buyers definitely want to see some better opportunities and better pricing, lower pricing to get into the housing market. But I think we can all at least agree that stability is good right now, considering where some other aspects of the economy are. So that's it with the national housing market. Volume is still very low. And as always, I want to caution you, don't pay attention to the sensational headlines. I just saw a video on YouTube. This guy put up a listing and said, oh my gosh, the sellers had to drop the price by 25% to get it sold. That means the market's crashing. Well, no, it doesn't. It just means that seller massively overpriced their property. So be careful taking that as data for a larger market area. Just check with a professional in your area, right? Sacramento is different than Miami, is different than Reno, is different than St. Louis. So check with professionals. They'll tell you what's actually happening. Moving on, let's talk about our local market. The number of available homes is down, number of pendings are down, number of sales are down, homes are taking a little bit longer to sell, and the median sales price is down just a little bit. And guess what? That is all totally normal for this time of year. So I'm not going to spend too much time talking about it. We will see where things go as we get into probably later into February next year. We'll start to see more movement, and depending on where mortgage rates go, that will be more of an indication how the housing market's going to be going, and that's what I want to start paying attention to. As of right now, everything's totally within what we'd normally expect for this time of year. Moving on though, I definitely want to talk about rental rates because pricing for rentals, and I mean for apartments and for homes for rent, not investors buying those things, but people actually leasing them, peaked out in June of 2022, and it has softened up a little bit. So tenants that are out looking for rentals are actually seeing a little bit better pricing. So that's good to get some relief in that area. We may see more of that because there are a lot of permits being pulled and a lot of multifamily under construction right now. Those will be new rental units as soon as they're completed. And that could change the dynamic. Obviously, supply and demand. If there's a lot more units out there, then that will help to control the pricing and it won't be increasing at an outrageous rate. Let's see, what else can we talk about? Oh, the auto industry. Man, they're having a tough time right now. So loan delinquency rates in the auto side just hit 2.95. That's the highest percentage that it's been in the last 10 years. A lot of those are the subprime loans, but that's starting to spill over into some of the A paper, some of the prime loans a little bit. So keep an eye on that. I think the auto industry and the resale car market's going to have a really, really rough 18 months or so. Part of the reason behind that, similar to what happened with housing in 2008, we pumped all this money into the economy for the COVID stimulus. People took that, they ran out and bought brand new cars, which inflated the market. And the folks that bought these vehicles at these higher prices also had to get these massive loans, and they had really high payments. What happened as soon as the Fed increased the Fed funds rate, the loan rates, auto loan rates went up. And auto buyers really pulled back, and a lot of that COVID money had been spent, so they were pulling back. People weren't buying as much. Well, when that demand dropped, the values on a lot of the resale vehicles also dropped. A lot of people that had vehicles got caught in situations where they probably owe more right now than what they could actually sell that vehicle for. So if they wanted to liquidate the vehicle, get rid of the payment, a lot of people would actually have to bring money in to close and pay off the remainder of their loan. and they don't have the extra money to do that. So the other option is let the car go. And that's why we're seeing these delinquency rates increase dramatically. Uh, so I think things are going to be tough, but that's good news because that resale auto market was just so overinflated. That needs to come back to reality. Gold actually hit its all-time high, $2,135 an ounce. It did come back down and settle back to kind of what's been its average, roughly average pricing for a while. The interesting thing about gold is that investors usually use that as a hedge against inflation or a hedge against a faltering economy. And what happened back in 2008, a lot of investors went, I need to liquidate my gold, move it to cash so that then I can buy into all these real estate deals that we're seeing. Well, what happened is from March to December of 2008, the price of gold, after having gone up, actually dropped, I think, somewhere in the high 20%. So I don't know, maybe 25 to 28%. Part of the reason is because so many investors dumped their gold, wanted to convert to cash. It flooded the market and pushed the price down. So that was an interesting thing to keep an eye on. And I'm actually somewhat surprised that the price of gold hasn't gone up more with so much inflation happening over the last 3 years. So curious to see how that's going to play out. Keep a close eye on that, whether you invest in gold or not. It is a moving part of our economy. It is an asset class. Lastly, I would say my advice to everyone right now would just be tighten up your budget, watch your expenses, don't be overspending, and if there's any possible way that you can save some money, put it into an investment account and have that money ready to deploy and possibly pick up some great opportunities over the next couple of years, depending where they are. I think that would be the best course of action. So that's that. Great 2023. It was a rough year in some ways, but it just all comes down to how we choose to see it. And there's always things to be grateful for, in spite of the challenges. And we come out of those challenges as better human beings oftentimes. So that's that. Reach out to me directly if you want to set up a one-on-one consultation. I'd love to talk to you about your real estate plans for 2024, how we can properly prepare and be ready to take advantage of the market, whichever way it goes. And as always, follow. We'll do more videos. We're putting up videos on specific neighborhoods. We'll get into more aspects of real estate so that you can watch our videos, be much more educated about the more detailed aspects of the housing market and being a buyer or a seller. So thank you again. I really appreciate all the support, and we'll talk to you guys next year.